Welcome to the KPOD Network. It's me, Joe, and you might be surprised to see me because I'm usually over on my own channel over there, Dead Cat Crypto, where I talk about crypto, but I'm by myself. I'll be shifting over here to the KPOD Network from time to time as part of an ongoing collaboration between myself, Scott, Bella, and hopefully others down the road. And the idea is to bring you multiple personalities who have multiple takes, giving you multiple angles into the crypto space. And as always, there'll be no hype, no pump and dumps, just the facts, and we'll be straight shooting in a space that's anything but. We at the KPOD Network bring you crypto and blockchain the way we see it as consumers and the way we play it as early adopters. So strap in with your drink of choice because I'm going to tell you why I think this cycle is going to be completely different than past cycles. And I don't even think there's going to be a true alt season. So maybe that'll bum you out. Maybe that won't. Maybe you'll disagree. Use the comment section down below, but let's get busy. If you've been around, you already know how these things play out, right? Bitcoin goes up and then Bitcoin goes down a little bit and then alts just absolutely rocket, you know, 10x, 50x, 100x. Everybody gets rich, everybody's happy, and then we wait 4 years to do it again. That sounds really great if you're one of the only people that expects that, but now the cat's kind of out of the bag. People front run these things by months, maybe even years, and I already see this cycle being different than others. I was recently asked, Joe, why don't you think there's going to be an alt cycle? I said, that's not what I said. I think there's going to be an alt cycle, but only for very specific alts. And that's going to piss a lot of people off who are banking on these altcoins to revisit their all time highs. I do not think that's going to happen for most altcoins. So if you round tripped your bags last time and you staked and compounded your staking rewards after the 95% sell off, expecting things to go back to all time highs and even higher so you could make a profit, I think you're going to be really, really, really disappointed. Let's look at the facts. The interest rates are much different. I'm talking about the Fed funds rate. When the interest rates are really, really, really low, that indicates a risk on attitude from investors. Right now, the interest rates are not low, relatively speaking. People are hurting. There's not that same amount of risk taking, and there's definitely not that amount, the same amount of disposable income where people can just throw money at investments. Back in 2020 and 2021, we had COVID lockdowns. People were getting free checks in the mail. You had this attitude of risk on. People were throwing money at failing stocks, whether it's GameStop or whatever the other ones were. People were throwing money at NFTs. NFTs were a major driver of the alt cycle, in my opinion. It was helping to onboard people who couldn't really understand cryptocurrency, maybe, but were given something tangible, an NFT, to kind of latch onto and enter the space through that route. People were enthralled by this. Hey, let me throw my COVID relief check into this metaverse project. That was all going on back in 2020, 2021. Secondly, the Bitcoin halvening, right? Most of the market cycle depends on this Bitcoin halvening cycle, this reliable 4 year cycle. Bitcoin usually tops out several months, 6, 8 months after the halvening. Well, this cycle, that is not what happened. What happened this time was Bitcoin hit an all-time high before the halvening. This is totally different. And once this happened, I said, ooh, the cycle is going to be different and it's going to hurt some people's feelings. So let's start with that. Let's start with Bitcoin. I've been saying all along Bitcoin is the most obvious play for any crypto investor simply because the institutions are involved now. This is one of the first asset classes in history where retail beat the institutions to the punch. If you bought Bitcoin 5 years ago, 6 years ago, whatever the case might be, you you're doing way better than BlackRock and Vanguard and Fidelity. So the fact that they're going to continue to pile in, Michael Saylor is going to continue to pile in, and we might get other companies to kind of do what Michael Saylor's doing. It keeps the spotlight there. Aside from that, you had the Ordinals protocol, where Bitcoin now has its own native assets, its own kind of shitcoin casino, where people who ordinarily might take profits in Bitcoin and move it over to ETH and flip NFTs, they have their own casino now. They could take their profits in Bitcoin and then gamble with runes, inscriptions, BRC20s, ordinals, whatever the case might be. Number two, you have this crazy dilution and fracturing of liquidity due to all the different L1 launches. How many times can we get hyped up over a launch? L1 launching, get your airdrop. This thing will trade like crazy for 2 weeks, and then all of a sudden the bottom will drop out of it. Oh, another L1. Oh, look, an L1 token. Here's an L1 token. Everyone's attention is diverted. There are way more blockchains than maybe even users at this point. There's definitely way more blockchains than apps. And there's just not enough liquidity to send all these altcoins to all-time highs, especially the old ones that don't really have an interesting narrative to kind of hang their hat on and ride into the bull market. We're already seeing this. Where are we seeing this? Well, let's look at the total market cap of crypto excluding Bitcoin and ETH. It already topped out, which means if the tokens in your portfolio are nowhere near all time highs, think about what kind of liquidity needs to be injected into the space in order for you to actually realize profits after round tripping your bags and holding them through the whole bear market. You're screwed, and you know you're screwed, and you know that I'm right. But this is a really bad sign. So if you're holding Atom or you're holding Osmo or you're holding Algorand or Cardano, I really think you need to step away, make some smart, shrewd moves, and be objective for once. Don't get married to your bags. I dumped all my ADA at $1.13. I got out of Atom. I got out of Osmo. I got out of Osmo, by the way, when Bitcoin was a quarter of its current price, and the Osmo price is still the same. So, how high does Bitcoin have to go for my Osmo to go back to $10? Does Bitcoin have to go to $2 million a token in order for the Osmo faithful to be proven right? Hey, I staked my Osmo all this time. Look how smart I am. It went back up to $11, and now I have 18% more Osmo than I had a couple years ago because of staking. Yeah, but if you just bought Bitcoin or at least concentrated on Bitcoin, you would have made profits way sooner and you would have taken way less risk. And that's the thing that people who gamble on these altcoins, they don't even factor into their decision making. You're taking immense risk holding altcoins. So, in order for your risk to pay off, you need to do multiples of the previous all time highs. You're not going to get that with most alts. The third thing, the final thing that makes this cycle different, retail ain't back. I don't know if you've noticed this, but you go on X, you go on spaces, there's just not the same amount of people participating in these spaces. 3, 4 years ago, you could fire up a space in the middle of the night. You'd have 100 people in there with 15 people requesting the microphone, wanting to get engaged in the conversation. This is simply not happening. Retail's gone, and I don't think they're coming back anytime soon. And this circles back to Bitcoin again, but let me start here. UST, Celsius, FTX. How many times does retail have to get bent over before they just say, enough is enough? I'm going to throw my money into an index fund in the stock market and I'll make my cash that way. Stock market's up 30% this year. That ain't bad. That definitely is better than the inflation rate. It's better than a lot of other investments. The other thing is, if retail really wants exposure to crypto, they could simply buy ETFs now, which didn't exist in the previous cycle. So when I go see my family on holidays and they ask me about crypto, I'm not going to say, "Oh yeah, you should download this wallet, write down your seed words, make copies of it, but don't show it to anybody, keep it safe, and then you should buy all these obscure altcoins on a DEX." What's a DEX? Oh, it's really simple. It's a decentralized exchange where you're swapping tokens with nobody, just these obscure pools of money. I'm not doing that. I'm going to say, "Oh, you want some tokens? Well, first of all, look at the Bitcoin ETF. It's the easiest way to get exposure to the crypto market. And number two, you could buy tokens on a centralized exchange. It's kind of the same thing as buying stocks. If you really want to gamble, do that." And that's what people are doing. That's why these dinosaur tokens pumped after the election. People just went to centralized exchanges. They bought the familiar names. They bought what they heard of before. They bought the Doges, the XLMs, the Ripples, and all that crap. So obscure altcoins are the biggest losers so far, and I think they'll continue to be. So, no alt cycle, Oh, there will be an alt cycle. There already has been an alt cycle. Look at what has been happening on Solana. Look at what has been happening on Base. Look at what's been happening even on Arbitrum. So there has been an alt cycle. And like I said before, alt cycle market cap already peaked. So why didn't your portfolio already peak? I think you need to take a good look at your holdings, make some smart decisions, be objective for once, and don't get married to your bags because all the alts are not going to